Hi, welcome to this video day, which is on the 11th of December, it's Sunday. In today's video, we are going to be looking at three pairs. They all include the Swiss franc. We're going to be looking at Euro CHF, GBP CHF, and finally NZD CHF. We'll go to the charts in just a moment. Now, we think the Swiss franc is on the verge of a major move to the upside. The risk reward on Swiss franc longs looks good. I'm going to explain the logic of these trades and also point out the key levels of support and resistance. Before we do that, if you want to learn all our trading techniques, check out our trading strategy, our daily technical sentiment analysis of 14 FX pairs. All you need to do is go to the link beneath this video and you'll get live access to our membership center. Now, in terms of live access, that will cease shortly. We'll be going to an annual subscription. You can lock it in for a limited period and also get a discount on your membership fee. Details beneath this video, of course, and also if you want to, you can follow our Facebook page and join our Facebook group of traders if you wish. Now, in terms of the first pair we're going to do, it is going to be Euro CHF. Right, Euro CHF. Now, in terms of the technicals, we'll do them in just a moment. I just want to look at the sentiment behind the pair and also the big fundamentals. Now, in terms of sentiment, I'm using our favourite sentiment tool. Regular viewers will be familiar with it. It's CFTC Net Traders Positions. Now, if you're unfamiliar with it, you can look up our video COT Net Traders Indicator. Okay. Now, what it does show you is big money positioning. That's real money in the markets on the IMM futures market, which is a major portion of the FX market. So it's like a kind of pole, and it gives us an idea of how speculators are positioned. We're interested in large speculators like hedge funds, big managed money. Now, we just do it as a simple ratio. And in terms of large speculators, they're 12 to 1 in terms of long positions over shorts. That's an extreme position. Now, on the other side, we've got commercial hedgers. We will normally look for them to go against the speculators at turning points. They're hedgers, they're not making or losing any money, so for them to move hedges, they just need to feel that prices have shot too far from fair value. And they've got 4 to 1 in terms of shorts over longs. Now we express it as a divergence, so you got 12 to 1 here, 4 to 1 there, total divergence 16. That's big in this pair. Any divergence above 10 will attract our attention. Okay, now this is a big divergence in this pair. Why are the speculators so long? Why are the commercials selling short against them? I've written up some notes down the bottom here. I think the euro's gone up. Obviously, ECB, central bank policy to raise interest rates. They've been raising interest rates in the last few months. Market is looking for them to raise interest rates again in the coming week. I think that's now in the price. Okay. Energy costs, they've fallen back from multi-year highs. Now we have started to see energy costs move up again. Okay. Now, in terms of energy costs, hugely important in Eurozone. Fell back because there was mild weather. We've now got a cold snap. You can see the sort of benchmark, which is Dutch natural gas, move up from below 100 to around 150. It could go higher. That will weigh on the euro. The energy crisis is not over. Eurozone is facing a cold snap into the middle of the month. Obviously, they haven't got Russian natural gas. They can't import enough. So we're looking for prices to rise again and weigh on the euro. Market only sees a mild recession in Eurozone. We don't agree with that. We think it will be severe. If it's a mild recession, it's in the price. I'll do a separate video on the euro and euro fundamentals in the week, but that's just a brief summary on why the euro has been relatively firm and specs are heavily long. Like I said, good news priced in for the euro. CHF fundamentals. Swiss economy has low inflation in terms of European countries, and it's a stable economy. Okay, now in terms of low inflation, the Swiss National Bank want to keep it that way. And the way they can do it is by seeing the Swiss franc strengthen. They want a lower euro, and they can intervene in the market. They've got huge foreign currency reserves to push the euro down if they want. Okay, I personally think the euro is going to break lower anyway, but the euro will not be running away to the upside in our view. The Swiss National Bank, very important to them to keep the Swiss franc strong against euro, keep inflationary pressure low in Switzerland. Finding the CHF is a safe haven currency. We've had risk on, so safe haven currencies haven't gained any strength, obviously, but we could easily move to risk off. That would be an additional strengthening factor for the Swiss franc. Now, in terms of when we have this big rally up here, that's when the speculators really piled in long the euro and commercials started to sell. We did come down a bit, and now we've kind of come back up in a laboured fashion, not too much volatility. I personally think we're on the verge of topping out, and there's some levels of resistance to look out for. First one is going to be the 99 level, a round number. See, recently a couple of pokes through, can't get through, and we were red on Friday. In terms of the next level, I'm going to put it on these bodies. You can see there. Okay, so we've got another level here, two tails, two bodies over here. So just below the 99.50 level. On Friday, red, but not too much action. Just draw that in. My own view is you could sell the euro back to the 99 level with a stop back behind this tail here, say 99.60. Okay, or take it on a break lower. And I'm going to say those two tails that I've just drawn the line through here. Okay, so basically you're at about 99, what's that, 98.20. If you're selling through this level here, your stop could be just behind the 99 level. I'd say 99.20, 30, something like that. Where could we go to? Now, we know that specs are heavily long. If we go through the level, we're looking for stops to get run. So our own view is we should get back to 96. Okay, and then back to these lows over here, 95. So looking for those specs to get taken out on stop. It's been fairly boring price action, but that could soon liven up with a big move to the downside. So the risk reward, in our view, is good. I just think the good news is in for the euro. We shall see. Right, let's go to our next pair, which is going to be GBP CHF. Right, GBP CHF in terms of CO2 divergence, it's at 9.4. Speculators heavily long, commercials short, not quite 10, but quite big in this pair. Now, in terms, we look at the price action. I'm going to talk about the UK mini budget sell-off first. You had a big sell-off on the red, follow through on the blue. That's low volumes. That could be considered a flash crash. But in terms of the sell-off, people losing credibility in the UK government's fiscal policy. We then reverse on the Bank of England intervening to stabilise the gilt market, come back a bit. Then we run on a new leader for the UK government, and finally the scrapping of the mini budgets. This rally, kind of relief that the mini budget was not carried through. Rally too far to the upside in our view. We did come down a bit, then we've rallied back and we're kind of hanging around. Now, if we look at the fundamentals, just do this quote from Commerzbank, depressed economic outlook, the comparatively cautious monetary policy, which is likely to be confirmed by a return to a 50 BPS rate step. Bank of England next week. Last month they did 75. This month they're only expected to do 50. And the continued high levels of inflation continue to put pressure on sterling. So we've got Bank of England who will be dovish, and with good reason. They've got an economy that faces recession. I think everyone in the UK thinks a recession is coming. Energy crisis is still around in the UK. And also there's a cost of living crisis. So you've got a central bank that isn't going to be too hawkish, high inflation, a recession. It's just not looking good. Risk on has been supportive of sterling, just like it's been supportive for the euro. Okay, Swiss franc a safe haven. Now, in terms of the price action, after topping out here, down, back up, like I said, it's like kind of not doing too much. So this double top should hold. Okay. So in terms of the double top, you could look to sell off it with a stop behind 116, which is a round number, something like 116.40. Okay. Now, in terms of what if we don't rally up, kind of, I think, losing momentum and you're getting low volatility. There's some lower highs. You could go through the next round number, which is 114, okay, which is just below this double bottom, and then look to sell. If you're coming in, on a break lower rather than selling a rally, I think your stop could be behind here. Okay, so basically behind that red body, red tail, blue tail nearly reaches. Where could we go? Well, I think we could go back towards the 110 level. Okay, that's before the mini budget sell-off. So it's about just over 3 to 1. And I think we could possibly overrun down to the 108 level. Now, in terms of you coming in short on a break lower, you'd be looking for the stops to get hit, the speculative long. So you'd be looking for a good move through. If you didn't get a good move through the level or close, you could always liquidate the position. But the way we see it, upside in sterling is limited and there's plenty of downside potential. Right, let's move to the next pair, which is going to be, well, last pair actually, NZD CHF. Alright, NZD CHF, in terms of COT divergence, it's plus 10 again with speculators, heavily long, commercials short. Rally, correction, rally. We're kind of hanging around now. Now, in terms of the NZD, it's been the strongest major currency over the last 6 weeks or so. This is just generally why markets so bullish of the NZD. But they see a hawkish Bank of New Zealand going forward. That's in the price for us. Another reason is a potential recovery in China due to the COVID restrictions being relaxed a little. Now, in terms of China, even with COVID restrictions being relaxed, it isn't going to have a big recovery. Obviously, it's a major trading partner of New Zealand. If you look at all Chinese data out recently, it's really below forecast, showing really big problems in the economy. They've got massive problems, which I'll cover in a separate video, okay? But I think market a little bit too bullish on a China recovery. Also, it's heavily correlated with risk on, risk off. We've had risk on in the markets. Stock markets until recently had been pretty strong. They look like they're topping out, but that's very supportive for the NZD, okay? So how would you play this one? We're sort of kind of trapped between 60 and about 59.40. I think in terms of this level here, 60, we've been through it on a couple of tails. I got my line straight. There we go. Through it on a couple of tails, failed back. You could look, if we did go through the level, to sell back through it with a stop back behind the double top that I've highlighted here on the left. So about 60.80. Okay, so look for the rally to fail. Now, what if we don't rally? I'll go through my targets in a second. You're an upsloping trend line. Sorry if I can just get it positioned correctly. There we go. And then you've got two bodies and a tail there. Okay, which are just below that tail. So if we don't rally, you could sell a break lower. So let's say 59.35. and stop back behind the two tails there. Okay, where could we go to on the downside? I think in terms of the first level to look out for, you could look out for 57. Okay, so 57 obviously tried to get through it there, then eventually we hurdle it, nearly get back to it and go up. I think that's a good first level to look at, but I think the NZD is really overbought, so I think we could overrun to the 60 level, 56 level. Okay, next level down. To the first level, it'd be a pretty decent risk reward. Second level, obviously better, but obviously our view has to come to fruition. Again, if you break lower, you're looking for stops to get hit, nice candle in your favour. Otherwise, you could simply take the trade out. Okay, so there's three pairs. Moment, price action, it's pretty boring in all three pairs, but there is warning signs behind the chart, in the sentiment and from the fundamentals, that we could see a switch to high volatility to the downside. So that's the video for today. Hope you found it useful. Thank you for watching.